In this bank panic, are there any safe investments? Today I'm going to describe what are potentially safe investments that I'm planning to invest in and what are the circumstances under which I will do it. But first, hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everybody, I'm Stephen Fox. Today I want to go over where we are in this bank crisis or panic or whatever you want to call it, because that will guide where we're going to invest and try to be somewhat safe, although it's hard to use the word safe in this environment. But we want to go with the trend, and the trend is our friend. And I think we're going to get some good news from Jerome Powell of the Federal Reserve. I think he's going to increase by 1/4 of a point and then probably be dovish in the interview. If he doesn't raise it at all, that'll be positive. And if he raises it to a full 1/2 point, which no one expects, that will be a disaster. So it's how much do you want to gamble on what Jerome Powell says? I think he's going to go 1/4 of a point, and then the question would be whether he's dovish in the interview. And I think he can't help but say something leaning towards dovishness with all these bank failures. In recent weeks, we've had the failure of the second and third largest bank failures in United States history. The first was Silicon Valley Bank, which was the second largest, and then Signature Bank, which was the third largest. The Federal Reserve and the Treasury Department and the executive branch combined on this to protect the depositors. They didn't protect the banks. It was given unlimited support and protection for all deposits for the depositors, but it was not a bailout of the banks per se. What happens when these banks go down like this? They're typically acquired by other banks, especially regional banks. And Signature Bank has already been bought. So they wait. The reason they get bought is that they get bought for pennies on the dollar, 20, 30 cents on the dollar. So the buyer is assured that they're getting more customers and they're getting them at a cheaper price. And so typically the acquirer makes all kinds of money. And the same thing happened with Credit Suisse. Now, Credit Suisse is in Switzerland, and it's the joke about Credit Suisse is that maybe it was too big to fail, but the joke was maybe it's too big to save. I think at the end they discovered it was too broken to fix. Okay, first, this was a bailout by the Swiss National Bank that they backstopped it, so they stopped some of the hemorrhaging. And then UBS acquired it for $3.5 billion. They only wanted to pay $1 billion at first. Credit Suisse is worth at least $8 billion, so they ended up buying it for $3.5 billion. In other words, they acquired Credit Suisse for 50 cents on the dollar. Okay, and that's the way it always goes. The acquirer always gets a special deal. This whole thing reminds me of 2008 in many ways. Back then, Warren Buffett of Berkshire Hathaway had a special deal with Goldman Sachs. Warren Buffett bought about $5 billion of Goldman Sachs preferred stock, and he was guaranteed a 10% interest rate. Now, this is 15 years ago. $5 billion was worth more then, and he was guaranteed a 10% return. Plus, when he got out of it, he was guaranteed to be given another 10%. This was a sweetheart deal, but this is so emblematic of how these things proceed. And I think he also helped out Bank of America back then. So Berkshire Hathaway is a big deal in all this because they have experience investing in banks. He invests in Bank of America and other major banks all the time, and he invests in regional banks. But he goes in and out of them. In fact, he goes in and out of most of his investments. People have this idea that, oh, he just buys and holds forever. Well, maybe Coca-Cola and a few select investments, but there are investments that he trades in and out of. It's a sign of how serious this whole situation is because President Biden and the executive branch has been talking extensively with Warren Buffett, knowing his experience with banks. And I don't think he's going to invest unless he gets a sweetheart deal. Basically, he's there to pick up the pieces or to get a special deal where he's guaranteed to make lots of money. But I doubt that he's going to put forth major money on anything that's a big risk. In fact, he will do it to help shore up the United States and also get a sweetheart deal. It's a win-win for everybody. So what are the safest investments right now? Well, on a 6-month CD, you can get about 4.8% at the time of this filming. So we haven't seen interest rates like this for the last 20 years or so. It seems like it anyway. And then there's money markets, which I prefer. It's usually 3.5% to 4%, depending on the day. But I like it because I can get out of it easily, and I want to have money to invest to play the stock swings, and I can swing both ways. I can swing either way, I personally have always felt that a good way to avoid losing money is to invest in Berkshire Hathaway, Warren Buffett stock. It's not going to be a booming stock, but like I say, I always think of it as it's like the S&P 500, only you're less likely to lose money. And oil has come down. He owns oil stocks, and the bank stocks have come down. So you're probably buying it at a relative low point. But again, I would want to see what Jerome Powell is going to do. We need some assurance that rate increases on the interest rate are a thing of the past. And looking at the chart, this is a chart since 1996. So since forever, it makes kind of slow, steady progress with not too many dramatic downturns. The most recent dip you see was, of course, after the health problems broke out in this country. So it's like an oil tanker. It makes slow, steady progress. It eventually comes in. You won't lose too much money, and you might make some money. So it seems like a relatively safe thing to do. And Berkshire Hathaway is a mega cap, $659 billion. So it's a major force in the market. A stock that Warren Buffett always recommends is the S&P 500, whose symbol is SPY, the SPY. Okay, and it's the 500 best companies, biggest and best companies in the United States. Why wouldn't this be something to invest in on a long-term basis? And the poor companies are automatically weeded out because you always have the 500 best companies. So as stocks go down, they are taken out of the index. So this seems like something to do. However, I think I'm going to wait until I know for sure that Jerome Powell is done with the rate increases. And looking at the chart, the 5-year chart on the S&P 500, you can see that the S&P was doing fine relatively, except, of course, when we had the health problems, but then it immediately shot up after that. And until 2022 came along, we were flying along. And right now, you can see the red line is the 50-day moving average. And it's right at the 50-day moving average. The market is trying to decide. They're waiting for Powell to see what he's going to do. And it's neither overbought or oversold. The relative strength is 50. It's right at the 50-yard line. So the market is literally waiting to see what Powell is going to do. If the market responds favorably to whatever Powell does with the interest rate increase, the next, it's a little more speculative, but I think it's fairly safe, let's say that. It's the QQQ, the 100 largest companies on the NASDAQ. And it has all your favorite mega caps. It has Meta, Apple, Alphabet, Amazon, Netflix, Google, plus Microsoft, plus NVIDIA, all the big mega caps and the 100 largest companies on the NASDAQ. On a long range technology basis, how can you really go wrong with this stock unless we meet with absolute disaster, which I don't expect. And I think the government's going to get us out of this eventually. It's just how soon will we get out of this? Companies like Amazon are laying off employees. Amazon announced another 9,000 people would be laid off. So they're anticipating lower demand, or actually are experiencing lower demand, which would indicate maybe the inflation thing is working. So in all of this, I think how inflation comes down is going to be important. But I think with oil prices coming down recently, I think it's almost certain that the next inflation reading will be decreased. Looking at the 5-year chart of QQQ, it's good to see that it's well above its 50-day moving average. And it has good relative strength. And by that, I mean it's not overbought. It's at 56. It's slightly towards the positive. And I think the reason this has been more positive is that people see those big mega caps that I've been talking about. They see those as fortresses of safety. And I expect this to continue on if the market responds well to Powell's rate increase. I think it could be a danger if he doesn't increase it, actually. Illustrative of how much trouble we're in is that people are now looking for a store of value, something that will keep its value and not go down too much, which is kind of the way I look at Berkshire Hathaway. But people are turning to gold, and gold has recently spiked up. And looking at the chart, you can see that gold is well above its 50-day moving average. People are looking for a safe haven when they hear that banks are crashing and burning. This is called the old man. It's the favorite in many ways for many people as a store of value. It tends to go up in times of inflation, at least historically. And it also tends to go up when things get bad because people are looking for a store of value, a safe haven where they can hide out and not lose too much money. And a very surprising thing that has happened with all this is that Bitcoin has shot up as a store of value. Promoters of Bitcoin have been saying this to us for years, that the monetary fiat system was manipulated and the cryptocurrencies don't have that problem. And so they would say that Bitcoin was a store of value, which it fluctuates a lot. But when you have major banks start to fail, people start to look at crypto a little more positively, let's say. Anyone that follows me knows that I love triple leveraged funds. They're exactly the thing you want for day trading, simply because there's a lot of variability. They're not for long-term trading. They eventually go to zero. But on a short-term basis, you can make a lot of money with them. And on the upside, I favor TQQQ, which is a triple leverage bullish fund on the triple Qs, which I described earlier, which are the 100 largest companies on the NASDAQ. On the downside, I like SORTY, SRTY, which is a triple leverage inverse fund on the Russell 2000, which are a lot smaller companies, which will be affected by interest rates. And also they have more regional banks in them. So if things are going down, this is probably going to go down the most. I think if Powell doesn't increase it by 1/4 of a point, that'll almost be seen as negatively. I don't know how the market will react if he doesn't do it at all, because if he doesn't raise it at all, people will say, oh my God, things are really bad, because inflation is still wild and he's afraid to raise it even 1/4 of a point. I should say something about these regional banks too. The reason we need regional banks is because they make loans to small business more than the major banks do. They will take risk, more risky loans, and that allows small businesses to expand. So they definitely fulfill a function. And I think the depositors at a minimum need to be covered for more. They need to increase the limit of the deposits that they cover. And this idea that you're supposed to spread all your money around to all these different banks. What is a millionaire supposed to do? He's supposed to put it in 4 different banks. Why? So we can create more paperwork? I don't know. It just sounds ridiculous. It gets covered either way. It's just convenience that you make it possible for people to deposit large amounts of money. And people doing major projects, I mean, that are doing business in the tens of millions of dollars and hundreds of millions sometimes, it just gets ridiculous. So I think the depositors need to be insured, and that they should make that a standard part of the insurance to cover banks' deposits, so we don't have these situations where we have to worry about bank runs. And all the things I've been talking about are simply things that I'm doing. It's not a call to action for you, because I don't know your personal situation. So that's the way I roll. Be sure to smash the like button, subscribe if you haven't already done that, and hit the notification bell if you want to be notified of future videos. And thank you very much.